This is King World News. I'm Mara King, and you're about to hear James Turk from GoldMoney.com discuss the gold market and where he sees it at this point. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have John Williams from shadowstats.com and part 2 of John Malden's interview. Joining us now is the founder of Gold Money, James Turk. From your recent article, Welcome to Stage 2 of Gold's Bull Market, quote, bull markets are marked by 3 distinct stages, and when gold climbed above $1,000, it only entered its second stage. In other words, gold has much further to climb in the months and years ahead, end quote. Let's talk about that a little bit, James, because here we are in phase 2, and it's important for listeners to understand that. Can you talk about that a little bit?
Yeah, bull markets do have these 3 stages, and there are a number of different factors that differentiate between the 3 stages, but the prevailing one is, how people see the market at that moment in time. Stage 1 is marked by apathy and neglect. People just don't pay attention to it. Stage 2 is where people start paying attention, but there's still a lot of skepticism about it. And then stage 3, that's when, the speculative frenzy starts and, people jump in with both feet, and the market is overvalued and ultimately goes to its parabolic top. We just started stage 2 when we went over 1,000, and you see the skepticism. People are saying gold is expensive, here at 1,200, 1,150, whatever. And my view is that it's, compared to the Dow Jones Industrials when it went over 1,000 back in 1983, people were saying the same thing. The Dow was expensive at 1,100, the Dow was expensive at 1,200. But if you had that attitude, you missed the next several years where the Dow tripled in price. I think the same thing is possible here with gold.
And, of course, the Dow eventually goes on to 12 to 14,000, so we don't know what's going to happen here with gold. A quote also from your article, an old and trusty adage says that bull markets climb a wall of worry. In gold's first stage, there seemingly was a lot to worry about, but most of these worries were emotional in nature and not logical. Few paid attention to relative value, which is the proper determining factor when making decisions about your portfolio. Truth be told, I too was worried, but I didn't let it keep me from accumulating gold and recommending it to anyone reading my analysis to do the same, end quote. Even the bulls are worried about gold's advance, James. Some waiting for a smash, which hasn't happened yet. And, of course, we're doing this on a Friday. Gold got hit pretty good, down nearly $40. Gains are very strong and steady in second phases of bull markets, are they not, James?
Yeah, they are, but you're going to see a lot of volatility, much more so than you did back in the first stage. And the reason is that you're starting to get more participation in the market, and so the volatility is to be expected. So you're going to see these kinds of swings. But, the overall strategy should still be the same one, Eric. You should really, month in, month out, just continue accumulating metal, because we have a long way to go before this bull market tops out. It's just starting stage 2. Stage 2 is typically the longest stage in a bull market. I mean, this could last more than months. It could last years. We just don't know. But, if you just ignore the volatility, ignore the noise, and by noise, all of the stuff that you hear that detracts you from the gold's underlying value, just ignore that stuff and, just continue accumulating it. Some days, some months you might get a higher price, some months you get a lower price. But, over the long run, you're going to be doing well. I mean, the people who have been accumulating it when it was back in 3 digits, they're sitting pretty. At some point in time when we're in the multi-$1,000 range for gold, people who are accumulating now are going to be looking pretty. The key is that on a relative basis, gold is still cheap. It's not expensive by any stretch of the imagination.
James, I was emailing back and forth with Jim Sinclair today. He just put out a piece, The Temporary Weakness in Gold. And he talked about the fact that the cash market 3 times was at about 1224. And so therefore we're going to have this corrective activity. And he talked about magnets, one being 1156 on gold and the next one at 1089. The point here is, as you just said, there's going to be this volatility. There are going to be these reactions or these corrections. So Sinclair is right. It's not something you lose your head over. If you're trying to accumulate something here, James, you want it to get cheaper, don't you?
Yeah, you do. And it's inevitable in any case, that markets don't go in a straight line. You get your up days and you get your down days. And I mean, look at what gold has accomplished just in the month of November. I mean, the numbers are absolutely staggering. We were up 13.6% for gold, and we were up 13.8% for silver in that 1 month. Year to date, gold's up through the end of November 33%. Silver's up 64%. They're down a little bit from those levels, but only a few bucks because gold closed 1180 in November, and silver was $18.49. So you got to take this stuff into perspective, I guess is what I'm saying. Yeah, today was a bad day, but it's been a brilliant year, and I think next year's going to be a good year for gold too.
Right, but James, my point here is you advise people each month to come in and dollar cost average, which is really the correct way to view this. And the point I'm making here is that if you're going on the basis of that, you don't necessarily want a runaway market. These reactions, these corrections, whether you're buying mining shares, whether you're buying gold, these are the times where you welcome these as a long-term accumulator. Meaning if I'm James Turk, and I'm sitting there and I'm doing long-term accumulations, which you've been, as you get new money in, you just turn it into gold each month, correct?
Yeah.
So you welcome these reactions, right, James?
Yeah, that's exactly right. And there's a bigger picture issue here, too, that I've made the point a number of times. Everybody's been concerned and worried about the gold cartel and, their interventions in the market to keep the gold price from being where it should be. Well, I also get upset when free markets are distorted by government intervention. But if you look at it from the point of view that the gold cartel is keeping prices lower, we're able to get rid of overvalued dollars and buy undervalued gold much longer and at better prices than if the gold cartel weren't in there. So even from that perspective, I don't let the gold cartel worry me. In a way, they're sort of doing us a favor by keeping gold under control. And I think we've seen their actions recently, too. But fortunately, in the second stage of this bull market, I think the gold cartel is going to be blown out of the water. It's probably already happening.
This was also from your piece, and I think this is important, James. You touched on it briefly in the opener. Quote, so don't be misled by what you hear or read in the mainstream media, and even much of the alternative media. After all, how many commentators have correctly identified gold's bull market, now a decade old, end quote. Lots of talk in the media about gold is in a bubble, which is patently false. Could you address that?
Yeah, there's a lot of opinion around, but there's not that much fact, not that much solid analysis. It's really, you have to look at it from a numbers point of view and to determine, gold's value. You want to buy things that are undervalued, and you want to hold them until they become overvalued. And what I look at is I use my fear index, Eric, which we've spoken about before, which is basically how to value the dollar, how much gold is in reserve versus the total quantity of M3 outstanding. And even at current levels, the fear index is only about under 2%. And, historically, that's very, very low. When gold was 800 back in at the end of its last bull market in January 1980, the fear index reached 10%, and we're only at 2%. So that basically says to me that gold has 5 times higher to rise before we even equal the 1980 valuations. There's just been so much paper money created that all of this paper is making gold cheap. And eventually, as this financial crisis continues to work its way through, as the second stage of the bull market continues to develop, gold is going to climb higher. It seems inevitable to me.
Also, James, would it not be a consideration that as you go through these different types of cycles, things tend to escalate? And so if you're having a series of them over time in history, and here we are in this next phase, but in the 70s, James, we really didn't have the kinky derivatives, and we really didn't have the mountainous leverage that you see today in the system. So my point here is if we went to 10% on your fear index, we could go much higher than that conceivably this time. Is that fair to say?
Yes, absolutely fair to say. Keep in mind that during the height of the Great Depression, the fear index reached 40%. Such was the fear about paper and paper money that people wanted the real metal and wouldn't accept any money substitutes. They wouldn't accept paper currency. Who's to say that before this is over, we wouldn't go to 40% again? And, given the way their policymakers are destroying the dollar with the actions that they're taking, I don't rule out the possibility that we could go much, much higher in my fear index, which basically means that the price of gold is going to go significantly higher as well.
I want to talk also, this was from your piece, quote, sticking on the media here for just a second, James. Gold is now in its second stage, and of course the worries don't disappear. They never do, because they are always emotional reactions and at first blush offer seemingly plausible reasons for not taking the right action. But there is a notable difference in this stage compared to stage one. Look how many people are writing and talking about gold. Gold has moved from apathy and neglect, stage one characteristics, to growing attention. But importantly, instead of embracing gold and analyzing it to determine relative value, today's attention is one of widespread disbelief and skepticism that gold can climb higher. These are exactly the responses one should expect to emanate from stage 2, end quote. James, some misinterpret the fact that media now talks about gold regularly as being gold is in a bubble. The reality is that you have to get the public involved in bull markets at some point. So this is quite natural for phase 2 of bull markets, and this continues later at a more frenzied pace into phase 3 mania. And so listeners should not be concerned that we are seeing increased media exposure, correct?
Yeah, absolutely right, Eric. There's another thing, too. People say these